Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Okay, remember it's unbiased price action analysis. I'm not here to confirm your bias and I'm not here to give you technicals or fundamentals. This is price action analysis as a sheep style trader. Okay, no bias, and I'm just gonna tell you the setups and the levels I got, and what I see on this chart, and how I plan to trade it. It's up to you what you guys want to do with the information, okay? But remember, this is price action analysis, unbiasedly. It's not fundamentals. It's not technicals. Stop complaining about that in the comment section. Now, if you want to share your due diligence, that's other than price action, cool. Or you want to say why you're bearish or say why you're bullish, that's cool. I love to read it. You guys know I read the comments. I don't know if any other YouTubers read their viewers' comments, but I read y'all's comments because I give a damn. But yeah, that's all I got to say, okay? So let's get into this unbiased price action analysis. So zooming out on the daily chart, you guys can see this downtrend we had since January of 2022, and you guys see my Fibonacci levels, okay, from January high 2022 to October low 2022. Okay, we have been consolidating just under this 50% fib level for 2 weeks now, or over 2 weeks now. Okay, overall we are still in consolidation mode. Now loss of the 408 level is a big deal, okay? It's a big deal. How unfortunately we gapped below it and the market decided to bounce. That 404 level was very annoying on Friday, but that 404 level just kept holding. I mentioned the 405 level, which was this previous pivot low right here. It just couldn't hold that level, that breakdown. Intraday, every time we broke down 405, it just bounced back above 405, and then end of day it just popped. Okay, remember, I'm not here to tell you guys the whys. I'm here to tell you the whats and the hows. Okay, so with that being said, how are we going to trade this and what levels are we going to look for? All right, I'll leave the why and why this happened to you guys. Is it because of OPEX? Is it because it was a Friday and a 3-day weekend? I don't freaking know. You guys can talk about that. But what I'm going to talk about is this 408 level. That's that orange line. You guys see, okay, how well respected this level has been in the past since late January. We had a bunch of bounces. We had a false breakdown. We had more bounces until Friday. We had the gap down and we found bounces, multiple bounces off the 404 level. Okay, so Uncle mentioned I would be bearish under 408, and I still am, but that does not mean I'm just gonna blindly enter puts and catch FOMO. Gotta be strategic with this, and you still gotta be unbiased because there's a lot of stuff that bears gotta do to keep to give us more downside. All right, so I've talked I often talk about the concept of role change on this channel. Okay, role change. What is a role change? So a role change is when we see a previous support level turn into a resistant. The other way around is if we see previous resistant level turn into support. Okay? If it's a previous resistant level that turned into support, that's bullish. Okay? If it's a previous support level that's turned into resistant, that is bearish. Okay? So we got that critical 408 level, as mentioned. We got below it. For me to favor more downside, here is the bear case scenario. For me to favor more downside, I want to see that role reversal. Okay? Since 408 was strong support, I want to see it get tested as a resistant for me to get bearish. All right? So what that means is if it tests 408 to 408.5 zone come Tuesday, and we reject, and then we break down the support, 407 to 406.5 zone, I would trust that as a rejection. I would be bearish. I would look for puts. Okay? I trust rejections from resistance when that rejection can lead to a breakdown of support because there's strength, there's momentum behind it. All right. If it recaptures 408 intraday, 15-minute chart, 1-hour chart, 4-hour chart, whatever you use, and then, you know, if it closes above it and then it closed back below it, we get a false breakout setup. I would enter puts direct from there. Based off the false breakout setup, I would be bearish. Okay? Of course, it would be a lot more bearish if we can reject from 408 or a false breakout and that leads to breakdown of support. Then I would favor more downside. Okay? Below 408, support is now at 407 to 406.5 zone. I'm still watching that 405 level, previous pivot low here, but give it a zone 405 to 405.5. Gotta watch that 404 level. I wasn't watching it before. I was watching 403.5-ish, you know, but 404, that's what the market says. So we're gonna have to follow the market, right? 404, and below that, I got 401.5 to 402 zone. All right, that is Fibonacci level, 23.6 Fibonacci level from October low to this February high. Okay, so a breakdown of that level would be very, very bearish. I would favor a test of 398.48. That's the 38.2 Fibonacci level from January 2022 to October 2022 low. Yeah, so if we break that down, next critical level would be obviously the yearly trend line. Okay, the yearly trend line is around 397, and then this pink trend line from October low, we have multiple touches on this line, especially back in late December. A breakdown is at 395.5. Okay, so break down these critical support levels. There's many reasons why we should be bearish if any of these support levels fail. Okay, I understand that there are fundamental reasons to be bearish right now, but I'm not gonna trade based off the news. I'm gonna trade based off the price action, because that's where, you know, market makers are doing their work. That's where they're moving the markets. That's, you know, that's where the money is made. Okay, so stay below 408 at all costs. To if you guys want to stay bearish, you want to see SPY below 408 at all costs. Break down some support levels. You guys know the deal, all right? Now, if we do not get that roll change and SPY recaptures 408, that would be pretty bullish, okay? That would be bullish. We got a false breakdown setup of a very critical level, okay? Now, let me go to the 4-hour chart. 4-hour chart shows us a little more detail than the daily chart, okay? Because you can see the pre-market and the aftermarket price action movements, and you guys can see a potential double bottom that the 4 hours shows, okay, around that 404 level. So that's the question: is this double bottom going to lead to a recapture of 408? If it does, you know, look for calls and play unbiasedly. If you're bear bias, that's where you want to cut your loss. If you're bull bias, that's what you want to see in recapture. You want to see that level recaptured. That's the trigger you need to enter your longs or calls. And above 408, I got the December high 410 to 410.5 zone, 412, and of course the 50% fib level at 414. All right, guys. So come Tuesday, stay unbiased and play the levels. Below 408 is bearish still. Recapture of 408 is bullish. Now, if you are biased, if you're a bull bias trader, just play the bullish setups and use the bear case scenario on when to cut loss. If you're a bear bias trader, just play the bearish setups and just use the bull case scenario as when to cut loss. All right? It's not rocket science. It's a sheep style trading. Bah! Triple Q. All right? I got that level at 302.3. You know, if you're a bull, that level needs to recapture. And of course, the 303.8, 61.8 fib level. If those recapture, that would be bullish. And I would favor 307 and 309.5 to 310 zone. And possibly up higher to 314. Okay? Now, if 302.3 or 303.8 back test as a resistant and it rejects, similar to what I said the SPY. We see that roll reversal. So if it backtests 303.8 and then it leads to a breakdown of a support level at breaking back down 302 or something like that, that would be bearish. Okay, now I do have support at 300. If 302 defends as resistance and we break down 300, that would be bearish. And I would favor 298, 296, and maybe it tests down to 294.3-ish, maybe even lower down to 290. We do have a gap around 287.5-ish. Okay, IWM. All right, it managed to still close above that 191.7 level that I got, but it's not showing much follow through. So it needs to recapture 193.5 for me to be bullish, putting 196 and 199 in play, okay? If it breaks back down 191.3, that would be very bearish, and I would favor a lower low. The last pivot low from this drop from early February is around 188.5. That is a support level, and if 188.5 fail, we could drop lower, 186.5-ish, maybe down low to 183 and 181.7-ish, okay? Tesla, that false breakout that we have from the 214 level led to a drop down to 197.5. But intraday, I had a level around 199 as mentioned, and we recaptured that level intraday, and it ended the day around 208.3-ish. Okay, so we got that roll change. Okay, remember we struggle. Tesla struggled a little bit recapturing, clearing that 199 recapture. We cleared it February 8th. False breakdown on February 10th, which led to a $12 drop, almost a $12 drop, down to 187.5-ish, before popping back up, cleared 214 again. Cleared 199 here, and then eventually led to clearing 214 on February 15th. All right, and yeah, we got a false breakdown, but look at this, that 199 level, it cleared February 14th, back tested as a support. We've seen the roll change here. You guys, what I'm talking about with roll change? All right, so yeah, you see, as long as above 199, can't get too bearish on it right now. But if Tesla did break back below 199, it would definitely look a lot more bearish. But right now, it just looked like a roll change of the 199 level. And it's setting up, or at least it wants to recapture or clear 214 again. So it's building up some strength to do it. But like I said, if it break down 199, I'm gonna favor something lower than 187.5. I will favor 183-ish, maybe down to 175-ish, okay? So we'll see. We'll see what the price action is going to do. Like I said, watch the levels. It closed around 28.3. There's support at 206, 203, 204.5, and 203, and of course that 199 level. So watch those levels, all right? If 214 recaptures, above I got 210, 211.5, and 214. Please add these levels to your charts. Okay, so if those levels are cleared, that'll be pretty bullish on Tesla. All right, Apple, still bouncing off that 150.6 level, 151 level around there. Give it a zone. But bounces off support is not enough. It needs to clear some resistance, starting with 153.5 and 155. Yeah. So if bears can step up at those levels, and I just need to see 150.6 break down, that would be very bearish. Okay, but as of right now, still consolidating. Apple's trying to figure out what it wants to do. Okay, so 153.5 and 155 are resistant. Watch if it breaks out, it'll be bullish. But if that 150.6 level fail, we could be going down. 149, 148. 146.6, the gap fill around 145.4-ish. Okay, so watch those levels. Unbiased trading, man. Now DXY here, it managed to hit that 23.6 Fibonacci level, one at 104.1-ish, and it hit it, it's tapped it, but we're just consolidating here. Okay, there is a support around 103.8-ish. Okay, based on these Fibonacci channel lines that I got, and then there's a good support level at 103.4 that needs to be watched. If that level fails, DXY could be looking bearish again and probably drop back down to 102.1 and 100.8. Okay, to be bullish, you guys already know it needs to clear 104.1, and we could target 104.8 and maybe a pop to 105.9. Okay, guys. All right, here's the VIX. So, yeah, 23.6 fib level was at 21.2ish. You know, strong rejection from that level that we got on Friday for the VIX. Okay, that's not bullish. That's not bullish, but hey, anything could change. Okay, so you already know, clear 21.2.3, bullish on the VIX. Okay, but as of right now, if it's looking bearish with that rejection, and if VIX wants to show follow through, the support at 19.5 needs to break down the target 18.6 and 17. Okay, guys, so those are the levels. Let's end this with the option flow. This filter for 500k premiums or above. Overall bearish. Now, one that sticks out to me is this one right here that was bought Friday morning. They try to catch the top around 46.75. That's where they entered, but it's a pretty big bet. 1.6 million premium. 360 is the strike price for March 17th. Okay, most likely a swing trade, I'm thinking, but they thought this, where SPY was at Friday, was a good enough entry to target that 360. Okay, so that definitely sticks out to me. QQQ 87% into puts. Okay, and a similar bet over here on QQQ, 275 strike price for March 17 expiration date. They entered around 299. That's pretty out the money. I wonder who this person is and what they know. IWM 93% in the puts. Okay, we're still seeing some big bets to the downside. The one that does stick out to me is this one, but it's 190 strike price. It's not that out the money, but it is out the money. Okay, 2.1 million in premium, over 13,000 in size. March 1st is the expiration date. Now, here's the Tesla, 67% into puts. Nothing really sticks out to me. Just a bunch of contracts bought. But as far as the ones that meet my criteria, I need to see ones with big size. Those stick out to me. But yeah, overall bearish on Tesla. Apple is 58%. That's interesting. So we're seeing a bunch of calls coming in, and the one put that did came in on Friday was an in the money put. All right, and 155 strike price. Okay, and what we got here? VIX. We'll end it with VIX. Nothing for the VIX. All right, guys. Thank you guys so much for watching. Hope you guys are having a great 3-day weekend. Enjoy it. Relax. Get ready for next week. We come back stronger. And if you guys want to join Uncle Charles, please consider joining my Discord. And let's kill this market together. We're not the enemies. We're not each other's enemies. The market makers are our enemies. They're trying to manipulate this market and get us to turn it against each other. Okay, retail traders unite. Peace.